What's going on, guys? Today is going to be uh, a fairly quick video. The topic will be on how to properly handle a loss. Now, for today's trade, initially I was bearish, but because of London session, we got the move I actually was looking for uh, during New York AM session. Because that happened, we were left with price action with a model setup of turtle soup. I did not want to see turtle soup because I wasn't interested in higher prices today. So I wasn't looking to continue following that model. My problem was that I didn't follow my model after seeing it. So because we got that sell during London, I should have ignored sells. The whole idea of me selling should have been gone because it already fulfilled my target. So I should have gone into the market with a clean, fresh bias looking for whatever presents itself, which was turtle soup. Turtle soup presented long opportunities. So we should have looked for long opportunities. Although price action was very choppy today, well, although prices went up today, price action was still choppy. Some people could have caught longs, some people could have caught a short. It's better to acknowledge when the market is choppy and stay away from it. Whether you come out the day on a positive or a negative, you have to sit through all this emotional distress of price action going back and forth, back and forth, back and forth. That's not the type of price action you want to be trading in. You want clean price action where our initial entry was at this candle, right? When we had swept 15-minute equal highs sitting within a 4-hour fair value gap. I figured it would be a good opportunity to sell, which we got this nice 15-second candle, right? That sold for over 15 handles. Initially, my stop loss was above here, but we had dragged our stop loss lower because of this move. I intended to have this as my stop loss, but I ended up having this as another limit order. So it placed two more contracts. That was a human error on my end. I immediately closed that trade once I noticed that, and I tried to re-enter uh, with the same leverage, right? After seeing this candle. That was my mistake because my goal should be aiming for consistency. If I had taken this this 6 handle loss off of two contracts, I wouldn't have lost much. I literally would not have lost anything. But because I didn't do that, and because I put another order in and got stopped out for 16 handles, 16 plus 6, a little over 20. At no point in time should I be losing 20 handles in one day. That is way too much risk, and I'm either taking two trades or I'm not really leveraging my stop loss properly. If you continue having days like this where you want to go back into price action and try to make back what you lost, you dig a deeper hole for yourself. And you can see it here. Human error of not properly setting up my stop loss and instead putting a limit order. And then human error for emotionally trading, trying to make back what I lost, thinking that this candle these two candles are really going to play out the move that I anticipated initially. That's not the case. After you take that loss, you sit on your hands, you wait, you let price action do what it has to do. If for whatever reason this stopped us out and then price wanted to actually deliver, in no world should I have re-entered off of that. It's important to stay very, very strict to your rules, because the reason why you have rules in place is to become profitable. Your rules should help you become profitable. If you're not following those rules to be profitable, how will you expect to be profitable? Does that make sense? Our goal is to maintain less than 15 handle stops, but aim for more than 20 handles, preferably targeting for 50. So between 20 to 50 handles is when you should be taking profit. Anytime sooner, if in this case we were at 19, we should not have closed the trade yet. It is still too early and too soon for you to close the trade. If you get uncomfortable, the best thing you can do is that when you're at a position like this, forget all this price action. This is the candle we're at right now. If you're scared of the reversal, drag your stop loss to break even, so that even if price does reverse on you, you get stopped out at break even, losing nothing. I would rather take a day like that than take a day like this and be stuck with having to recover from drawdown. The profits that I made yesterday got immediately dumped into today's loss. So looking at a week perspective, I haven't gained anything, but I haven't lost anything. So I basically wasted 2 days of trading simply because I wanted to take another trade. I made a mistake not putting my stop loss, and yeah, those two reasons are why I wasted 2 trading days and wasted about $900 worth of profit. If I had taken this one loss, I would have been down probably like $300, I would say. I would have still been, from a week perspective, up $400, $500. That's why it's very important we follow rules. And there's going to be points in time, even though I can consider myself more than a beginner and an intermediate, or uh, coming to become, trying to become an expert, you still face human emotion and human error. It's going to happen every single day. The way you avoid it is by following rules and being strict with your setups. You want to take good quality setups, right? Good sniper shots. You have to imagine yourself as a sniper. You're a sniper in Afghanistan, sitting in your post. Are you going to take a shot when the weather conditions are terrible? When it's rainy, foggy, you can't see anything, but your target's right there. He's just sitting there. The answer is no. You don't take the shot because you're an elite sniper. You know the weather conditions aren't in your favor. You know your line of sight is clouded by the fog. So what do? You put the gun down and you call. You call in. You inform yourself, inform your team the situation. when you say things out loud and come to a realization that it's not following your plan, it's not the right time, it's not the right condition to be trading or to be sniping, you stop. You stop immediately. Why? Because as a sniper, you don't want to reveal your location. So as a trader, you don't want to give up free profit. You don't want to give up free money. If that makes sense, there should be no reason that from this day forward, we have mistakes like this. Our goal is to maintain this consistency and follow our rules. Because if we follow our rules, we will be profitable. And if you come back the next day to the same post or to a new post as a sniper and you wait for your shot, it's a new day. Different weather conditions, different scenarios, it's a different setup. Target might be different, might still be the same, but it's a new day, a new opportunity. That's the point and the habit you want to get yourself into so that you avoid these mistakes, you avoid situations like this. Now, what happens when you do this and you don't follow rules? How do you recover? The only way you recover is by de-risking. After my first trade, having this human error, my mistake was that I didn't de-risk. I should have gone to one contract instead of two. That was another mistake that led to a bigger loss than it had to be. Now, because I've had such a significant loss, losing the profit that I gained from yesterday and basically having nothing this week, now I have to reduce my risk to the lowest. Why? Because in my head, I'm thinking of this as start all over, start fresh. I might not be in drawdown necessarily, but I'm not in profit either. I'm going to treat it more as a loss than a win because it's safer that way. I'm de-risking myself. I'm desensitizing myself from the thought of making money. A misconception everyone has getting into trading is about making money. In trading, you come to a realization that it's not about making money. It's about taking quality setups, following your rules. If you do those two things, take quality setups and follow your rules, the money comes so fucking easy. The money just spits out of nowhere. But that's only if you follow the rules. So, the way that you recover from situations like this is you de-risk as much as possible, but still have enough leverage to make significant gains. So I'm going to be using 5 micro contracts. Some of you may not be aware, but this market, each tick moves $20. These are ticks. This is the percentage. These are the handles. 10 handles times $20 is 200. And this move, it's $200 per contract in this market. In the micro market, every 10 handles and every handle, I should say, is $2, which is 10 times less than this market. So me moving down to 5 micro contracts becomes essentially one mini contract. This is the mini market, which is NQ1. MNQ1 is the micro market, which is micro NASDAQ 1 versus NASDAQ 1. Does that make sense? That's how I will be de-risking. Now, how much will my risk be? My risk is still going to be 10 to 15 handles. So it's never going to be more than $170 of risk. But I'm aiming for 20 to 50 handles with 5 micro contracts. If I follow this rule, I will be able to recover while protecting my leverage and my account balance. And that should be my main focus right now. Again, do not worry about the money. In trading, time compounds your money very easily for you if you're patient enough. I'll say it again. In trading, time very easily compounds your money for you if you're patient enough. Because our goal isn't about making money, right now our goal is to maintain and manage our risk. Time will do the heavy lifting for us and give us our money. Now, let's go over the trade of today, right? On what really happened and how we could have read properly. Before we do that, very quickly, I want to make sure that what I've said so far makes sense. And what I've said so far sticks with you so that you don't fall into the same habits as everyone else, which is constantly revenge trading, over leveraging, and getting impatient. If you can avoid those 3 things, it is very easy for you to become profitable. Those are the 3 main things that make you a losing trader. The more times that you obey and follow those rules and avoid those problems, the more times you can receive a payout and not have to buy another funded account or a valuation and try passing it or try getting that payout. This is what trading is. Trading is maintaining proper balance and managing risk. That's literally all trading. It's all it is. Now, if you look at the time, today, this was Tuesday, 2 a.m., right? Tuesday 6 a.m. I was looking to see price action tap into here during AM, and then we get that nice sell down below. Unfortunately, we got that sell during London, right? Where we tapped into here, sold down, sold down. This was my target. Then we got turtle soup. Because I went to sleep thinking we would be bearish, when we woke up and we saw this candle all black, right? I should have acknowledged that, okay, this idea of selling is no longer available. We've already completed that. My reasoning on why I didn't think that was because I assumed this would continue lower. I didn't think that this would really become turtle soup because I wasn't looking for higher prices during the week. However, things have now changed. Potentially, this week we could rally. Why? Because this is turtle soup, and if this decides to hold, we should no longer see any sort of retracement past this area. We could see a retracement in this area, but anything past this will tell me two things. One, either we reverse and we continue lower at the end of the week, or we chop within this range from this wick to this wick. We stay within this range. Again, today was a very choppy day on a lower time frame. On a higher time frame, you could have easily caught, just placed a market order and then held. Very easily, you could have done that. But in this type of price action, as ICT really tries to inform people, even if you caught a trade right here, let's say you entered right here, right off of this fair value gap, would you really be proud of yourself for taking this trade? And would you be comfortable while taking this trade if you were aiming for up here? You would have had to sit through for each minute, back and forth. Yes, expansion, but back and forth. Expansion, back and forth, back and forth, back and forth, back and forth, back and forth. Eventually, you would have got emotional, dragged your stop loss till probably around about here or here, and held your stop, still waiting, back and forth, back and forth. Once you see price go, oh, drag my stop, stopped out. Still in profit, of course, but you got stopped out before your take profit. And that's because it's all this back and forth price action that's making you emotional, which is normal. That happens. Which is why, even though you would have played out your trade properly, these market conditions weren't the best. No one's ever going to tell you, and no one's ever going to be able to say, oh, yeah, it's not a good market session. You can assume and come to the conclusion because of London, right? London just being so oversold, right? Just constant selling, even though it was back and forth price action as well. Overall, we sold a lot in London. Typically, when London does do that, it becomes choppy for New York AM session. So, speaking to myself, losses like these happen. It's inevitable. But it's how you recover and react to that situation that determines whether or not that loss was really a loss. I've had days where I lost maybe like 200 or 1,000 at the beginning of the week, but then I come back at the end of the week because I follow my rules and I follow my trades and stick to my model. That at the end of the week, come Friday, I end up either $1,000 or more or less, but I end positively. In the moment, taking it day by day, it hurts taking that loss, but then taking that win, and then taking that loss. But looking from a perspective of the week, all it seems like is I had one winning day or two winning days, and that was it. Hidden within the wins and the losses, right? That's kind of what you have to remind yourself constantly, that one loss does not define your whole situation. Yes, I lost today. I lost all the profits that I made yesterday. But I didn't lose money out of my account. My account is still active. I didn't blow it. So did I really lose anything? No, I didn't. But if I continue to leverage myself improperly and over risk and try to make back what I lost constantly in this back and forth price action, I will lose more than I should have lost. Tomorrow's going to be a clean day. That's what you have to tell yourself. You have to find ways to really cope with your loss. And I say that because if you don't, you get impatient, you get greedy, you start revenge trading, you start over leveraging. That's what causes you to spiral into a very dark place in trading that really becomes super hard to dig yourself out of and get yourself out of there, because you've tainted your idea of trading. You've tainted your confidence in your model. You keep telling yourself, this is my model, this is my model, but it's not your model. You just want it to be your model. You want to make back that money you lost. You want to impress everyone. Oh, look how much I made. Look how much I made. When I post my trades, it's not to brag or to flex or anything. That's strictly my journal. You have to push yourself to become as stoic as possible. This loss does not faze me because tomorrow my setup's going to be there at 7 a.m. I'm going to be ready with de-risked leverage, 5 micro contracts, waiting to enter my setup when it's there, if it's there, and only if it's there. And I'll be fine. After saying those words, you close the screen, log out, stop trading for the day. The same mindset has to be when you win. When you win and you take that take profit, it feels good as hell. But you're done. You're done for the day. You walk away. You come back tomorrow. You wait for the same time. Your setup, waiting for your model, taking it only if it's there, and you rinse and repeat. You lose, you de-risk. You win, you manage your risk properly. Maybe you could risk more so that you gain more. But if you lose that, you de-risk. If you win, that's great. Slightly de-risk, but continue that same model and same energy and same risk management because you're winning. You're on a winning streak. You don't want to become and set yourself up for a losing streak. You want to do your best to get yourself out of those situations. That'll be enough talk for how to handle losses. Um, Going back to the model on why this turtle soup is still playing out so well. We have this 4-hour fair value gap that price tapped into end of day Friday, which respected very well. We had the accumulation, right? Then we got that manipulation. Down lower, I did not like that we wicked out of this fair value gap range. However, that body rejection should have told me at least that there's no way we're coming back down. After that large of rejection, there's no way we should be coming back down. That was another mistake of mine. This was a clear sign of turtle soup, but of course, in hindsight, that's why I'm saying it now. In the moment, it definitely did not look like a clear turtle soup. And that's just simply because of the choppy price action. Right? I wasn't willing to take a trade now that we're already, 50% up in that range, right? Targeting this. We're already up. The risk of a retracement back to this level before we reach take profit is a 50-50. We're not here to take 50-50 trades. We're here to take a nice clean trade that presents itself with proper confluences such as fair value gap, SMT, turtle soup, higher time frame bias, making sure all those align so that we take trades that are like this. Turtle soup. If we had entered here or here, it's more better than risking when we're in that range already. So, one thing that I was even surprised my student was saying was it became 30 minutes after, right? And I had explained to him previously that sometimes you won't take a trade because your setup's not there, it's not clean. He told himself, I'm going to give myself 2 to 5 more minutes. If price action doesn't look clean, then I think I'm going to just call it for a day. If he had listened to his own words and conviction, he would have saved himself from my loss that I tried giving him as a win. Sometimes you're just going to have to accept and follow those rules that you tell yourself. I should have followed him. Although he is just starting, he had a clearer mind than I did coming into this day, because today's a Tuesday. I usually do well on Tuesdays. Tuesdays are usually a clean price action, so I wanted to trade. I wanted to see something. I was trading emotionally, which happens. That's normal. But you have to recognize those times and you have to stop. So after I took that second loss, immediate stop, I re-evaluated my goals and where I'm at as a trader. and I called it a day today. I'll come back tomorrow and I'll recover. It is what it is. I'm starting from ground zero again this week, which is unfortunate, but that's the result of my impatientness, my greed, and my ego getting in the way of trading. With that all being said, that will be it for today's video. I don't want to make it too long. If you have questions or concerns, feel free to ask them in the comments. If you ever feel hard on yourself or you can't handle or sit with that loss that you just took right now, come back to this video, watch it, because this will help you remind yourself to stay consistent and stay on track with your rules. Patience is key. The market will reward all of us if we're patient enough, waiting for our setup, waiting for the right time, managing our risk. The only thing you can control in this market is how much money you put in. If you're putting in all of your money, don't expect the market not to take all of it. The market's going to take every single dollar you're willing to give it. Just remember that. The market is not our friend. We are simply trying to catch and trade proper price action through our models. That's what being a trader is about. And in the process of it, we encounter these emotional challenges and face adversity of, maybe losing or not taking full profit, whatever it may be. Your real life outside of the charts haunts you when you're in the charts. Because if you're having a bad day in your personal life, you're definitely going to bring that energy once you actually start trading. You don't want to do that. Keep them separate. When you're here at the charts, you're focused. You're following rules. You are aiming to become a professional trader. That is your goal. Again, I'll turn on the executions. As you can see, these were the 15-minute highs. Swept. We had that 4-hour. I liked to see that tapped, which we sold past this, but ended up just being a move to sell liquidity for us to then rally, right? It is what it is. That happens. I guess funny enough, we became liquidity for someone's order, but this price action was terrible, back and forth. So if you took a loss today, don't beat yourself up for it. It happens. This was hard price action to read. If you took a win today, great job in holding and staying true to your setup, as well as managing your stop loss. That correlates with your risk. So great job. Continue doing that. Continue being patient and pretend that this win or this loss didn't happen tomorrow. If you won or lost, you're still risking properly based off of your situation. Just because you took a win, doesn't mean you have to start risking more. Relax. You took a nice win. You can de-risk. You're up for the week now. It's smooth sailing. With that all being said, guys, thank you for watching and tuning in. I'm sorry that was very long, and I hope this is not too boring to sit through and listen. Have a great day, and we'll talk again tomorrow.